Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis, and today we are going to be talking about Ripple and XRP. So sit back, relax, and before we fully jump on into this video, I do just want to ask guys to please leave a like on this video. It does help the channel grow immensely, and of course I always do greatly appreciate it. And if you do find any of the information in this video valuable, useful, or interesting in any sort of way possible, definitely hit that subscribe button and turn notifications on to never miss a future update. So let's just dive in and let's talk about some things. So first off, I did tweet out today talking more so about the Super Bowl crypto commercials and ads and stuff. Was it great? Yeah, I mean, it was pretty cool. It was interesting. But for the most part, I am watching this market tomorrow. Today, if you will, since it is 1:18 a.m. Honestly, I am very concerned. I'm actually very worried to see the indices open, and the reason why is because they were a little bit weak, and we're going to be addressing that. We're going to be talking about that, and we're also going to be talking about a major factor that we should all be paying attention to as well. And I know for the first a little bit of this video, I'm going to be talking about Bitcoin. It's not because I want to center around Bitcoin or anything like that. It's more so the idea that I want to talk to you guys about what's happening right now in this market. Even XRP down 5%. Trading volume is down 25.65%. A lot of altcoins are taking big hits right now, and I told you guys this, and I addressed this, even going back almost 2 weeks ago now. Okay, these are the three main charts that are scary to me. All right, the S&P, the Nasdaq, and the Dow Jones. They were rough on Friday. They were extremely rough. Anybody who is saying that they are not is obviously just not looking at it from a chart perspective. These look like they are in a major downward trend. Funny thing is that we are also seeing weakened RSI that is not in oversold areas at all, by the way. And we are seeing diminished volume day in and day out. This goes back to Friday, by the way, just so you guys know, because, of course, over the weekend, the indices are not live. Now, these open at 9:30 a.m. Eastern Time Zone today. And honestly, I'm expecting us to come down a little bit lower. And if we do not have a green day today, it's going to be very rough for crypto. And I'm talking about we could be seeing a little bit of a crashing event happening for crypto. And of course, you guys do see the Nasdaq here and even the Dow Jones. These were in a very rough state. They still are realistically, because they are frozen at these prices until, of course, the major opening today. I'm watching this very closely, and I want you all to keep a close eye out on all three of these. If I do see any sort of major price action movement on any of these three, I might do a little bit of a live stream today. In terms of Bitcoin, I'm still expecting the same price action move. More so, I'm looking for that test of 40.7K specifically. Of course, we do see some of the price action moves over here, more so the 236, if you will. I'm watching this very closely to see if we do test that 40.7K zone. That is what I'm waiting for. And honestly, this has been in one major sort of downward trend path ever since we hit that resistance point all the way up at around almost 46K. And right now, at our current price, we're down about 8.62%. I said, prepare for about a 13.54% move, which again is about roughly another 5%, which will, push altcoins another roughly 5 to 10% down from their current, prices. Just to give you guys a real quick insight on XRP, if we do have another dropping point on this, maybe, another 5-10% from our current prices, here's about 5%. It will test those, it will test around like 75 cents, almost the exact lows from going back to, December 13th and even December 6th. But I'm also expecting even possibly double-digit figures at 10%, with as low as, of course, 12.28% to test 69 cents, which I've been saying for the last couple of days. The reason being is because Bitcoin dominance. So I don't know if you guys remember, but in a live stream, I want to say this is going back like a month ago or so, I told you guys that I'm watching Bitcoin dominance make this ride back up to 45%. This is actually very bullish. The higher that Bitcoin dominance goes here is actually more beneficial to us because it allows for Bitcoin dominance to crash while Bitcoin is going on its last major parabolic move, which will lead us to alt season. But I'm concerned in terms of course, the major indices because there is a lot of things that are happening around the world that are going to lead to possible major sell-off events. For example, I've been talking to you guys a little bit about Russia. So, of course, the Russian stuff, or I shouldn't say Russian stuff, but, the Russia, overall confrontations are getting stronger and stronger day in and day out. We are seeing some major alarms here. The problem with this is the idea of a possible war breaking out. The issue with this is that if we do see this continuing to move the way it is, we will see money selling. Similar to, crypto, right? For example, there's days where we do see, hey, Bitcoin's being banned in this area, and all of a sudden we see a massive sell-off event. It's a psychological, sort of sell-off factor. But it's the same thing for stocks as well. Individuals will read things like this or read about the inflation rates and stuff like that, and they will sell their stocks. They will, the markets will crash because of psychological effects. We will see the same thing happen through crypto as well if we do see the major stock market crash. Now, I'm not expecting any sort of major, crashing point. If anything, we'll most likely test those lows on a lot of these indices, going more so back to like these major candle wicks down here, which are roughly around like 5%. So it's nothing too significant. We might even test as low as going back to March of 2021, which would be a little bit more of a significant drop. I mean, we're talking about, let me go over here. We're talking about roughly around a 10% drop on, of course, major indices, which is pretty significant to say the least. But we are also seeing major things continuing to build around bankruptcies and even foreclosures as well. We're seeing a wave of bankruptcies and foreclosures appears to be building. A lot of things are happening within the financial sector outside of crypto. I want you to all pay attention to things that are building within the banking and banking scene in general. We're talking more so about loans. This is all kind of building back to, 2008, right? Excuse me. Even here is my view that when the bank regulators change their position with respect to their treatment of defaulted loans, an anticipated tsunami of real estate foreclosures and bankruptcies will be upon us. And this is what I am awaiting for as well. Like, I want to buy real estate, but I know that a collapse of the real estate market is nearing day in and day out because it reminds me exactly of 2008. And I know a lot of you are probably going to say, dude, aren't you very young? Like, you probably don't even remember 2008. Guys, I have been studying and looking at finance my entire life. I have been, in these markets forever, since I was like a kid. The reason for this is because I pay attention to real world problems, specifically within, of course, the real estate, the financial districts as well. Like, all of this plays into major specific roles that individuals can take in order to de-risk themselves from things like inflation, market collapses, etc. You could also very well position yourself perfectly to take advantage of this and actually make a ton of money in the long term. We also see annual inflation during 2022 is projected to be close to 7%. We know that this is much higher. I mean, there's a lot of things that everyone should be paying attention to right now because, overall, I'm not saying that we're going to see a collapse of the entire market, very soon. I'm just saying, how long could the Fed, really kind of protect, these markets? They have been protecting them for a while now. I don't think that they can continue to protect them. We see even, Bank of America says the Fed is desperately behind the curve in fighting inflation as markets brace for the possibility of an emergency rate hike this month. Now, the Federal Reserve is desperately behind the curve after inflation jumped 7.5% in January. The bigger than expected jump in inflation has led to surging probabilities that the Fed might do an emergency rate hike this month. Aggressive Fed at moment of overvalued asset markets, not normally recipe for big returns. And honestly, when we are talking about things happening right now, yeah, I don't think that we're getting behind inflation the way that we should be. I really don't think that there's any sort of major innovation happening around these financial markets to better the inflation curve or even try to counteract it. And we even see here U.S. inflation is running far hotter than even the Fed expected. Here's what some of biggest banks and asset managers say about it. We're seeing, U.S. Inflation surge 7.5% compared to the previous year, the most since 1982. The jump beat Wall Street forecasts, and investors are now preparing for a much faster rise in U.S. rates. All of this goes hand in hand with psychological effects. This is what I've been telling you guys, and this is exactly why I've been talking to you guys about watching the major indices. Do not disregard them at all. And again, these are the highest rates since like the 80s. This is crazy, to say the least. And again, we're even seeing, more so talking around about 2009 as well, with the yield, the 2-year treasury, it's up by the most in one day since 2009. Okay? This is crazy. The jump in inflation beat all market forecasts and weighed on the markets, with the S&P 500, Dow Jones, and NASDAQ opening lower on the news, which this is exactly what I'm watching for right now on Monday as well, aka today. I'm telling you, we're even seeing Goldman Sachs chief economist talking about this. We even see JP Morgan asset managers talking about this. I think that you should all definitely pay attention to things that are happening, because we are going to be seeing a lot more increase in terms of inflation rates. And it's going to get worse before it gets, better. And I really do think that a collapse is on its way. We just don't know exactly when. We just know it's nearing. We even see here breaking news. Europe's financial regulators are warning that European banks are at risk from soaring property prices, loosening lending standards, and rising household debt levels. Europe's financial regulators are warning the region's housing market has decoupled from the rest of the economy since the pandemic hit, increasing risk for banks due to soaring property prices. We're seeing the same exact thing in, of course, the United States. We're seeing, properties going for astronomical prices when they're not even supposed to be worth close to their amount. We even see here the Federal Reserve will be testing the ability of the largest U.S. banks being about to handle a recession. The test will include unemployment jumps to 10%, 40% decline in commercial real estate, collapse in asset prices, increased market volatility, testing a severe global recession, which leads to heightened stress in commercial real estate and corporate debt markets. I'm telling you, when we are talking about this, it's funny when we're talking about unemployment jumping to 10%. It's already way higher than that right now. Okay? I mean, in general, okay, they are testing this because they see what's going to be happening. And this doesn't mean that you should de-risk and sell all of your crypto and go into the US dollar. No, absolutely not. In fact, I think that crypto will become a safe haven for a lot of individuals to put their money in. I know that we have not decoupled from the stock market, but I believe that when we're talking about crypto becoming the next big thing, I think a lot of individuals are going to feel a lot more safer putting their money into DeFi protocols to earn a significant percentage on their holdings by staking. But also, I really do think that we're going to be seeing an urgency within CBDCs and digitization as well. And when we are talking about, the Fed, and we're talking about governments moving in on the next major innovation to payments and the entire payment infrastructure, there's only one way it could really go, and that is digital. Okay, what's going to be the next major innovation to the financial market? Besides, of course, digitization. CBDCs, in my opinion, are going to be huge. I do believe that the adoption of crypto is allowing for more and more urgency within these markets as well. And I honestly think that in terms of inflation, in terms of a possible market collapse, I think a market collapse is going to happen first before, of course, CBDCs take over. I think that this is the perfect catalyst event, and I think it's going to happen at a very weird time in the markets. I think that when we do see an alt season, which I believe that we will see an alt season before a major collapse, okay, I believe that we will see a collapse in these markets before the true utility values of major assets like, for example, XRP do, get unlocked. And when we are talking about XRP, yes, I will say this. In terms of XRP, it is one of my main choices to put my money in and hodl, even through inflation rates, market crashes, etc. Don't get me wrong. Will I be holding my XRP at values less than what I paid for it? Absolutely not. I will be selling and rebuying the dip as I do see it, kind of accommodating to that, especially with a lot of the waves of uncertainty with, of course, the major indices. These three are on my, checklist. These are things that I'm going to be watching today, tomorrow, the next day. These are three that I continue to watch, and honestly, I think everyone in this market should be watching these three closely and keeping up with the news in terms of psychological effects that could bleed into this market. With Bitcoin dominance at around 43% and Bitcoin looking weaker than ever currently, I'm very concerned about a major collapse in crypto. And when we're talking about a major collapse, it's only this 13%. But if we do something like we did back from September to those September lows at about 24, almost 25% of a drop in price, 25%, look at where 25% gets us. This is testing nearly those exact lows going back to January 22nd. This would be almost 35K. Okay? And I'm not saying that this is what we are watching for. This is what's going to happen. I'm just saying we can go lower. But I am more so dead set on possibly testing those September lows or even going to 40.7K, which at 40.7K, it's a little bit less of a downside potential from our current prices. From our current prices to those lows, it is roughly about a 2.92%, which is not going to be too bad overall if we do hold that level. But of course, I'm watching the indices closely as they do open today at 9:30 a.m. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on. If you guys want more free content, you guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, I hope that you all have a beautiful day or a beautiful night wherever you guys are in this world. It's been Nick. Peace out, guys.